What if I told you that SEBI has introduced a new category of investments that is smack in between a mutual fund and a portfolio management services? That's what we're going to see in the next 8 minutes on this video, all about the special investment fund that SEBI proposes to launch. And that's going to be a great boon for high net worth individuals. Let's see if this will suit your investment needs. Welcome to Finsherpa. This is Babu Krishnamoorthy. SEBI has just announced the launch of a new investment vehicle. This new vehicle is called Specialized Investment Fund, or SIF as it's popularly now come to know. This is a product that stands right in between a mutual fund and a PMS. It has the regulatory frameworks and oversight that a mutual fund enjoys, yet it has a lot more flexibility than a conventional mutual fund. So you have the advantage of playing within a certain regulatory environment, but you also have the advantage that these funds have a lot more freedom to go beyond the normal mutual fund to create greater wealth. But let's look at what is an SIF. SEBI over the last few years has noticed that mutual funds is a very retail product and they've had a ironclad regulatory overlook on that. On the other hand, the portfolio management service is a 50 lakh investment size, very large. Therefore, it is only for the large investors. In between, there was a lot of gap and SEBI felt that there was a lot of unscrupulous players playing in that space. Investors were getting impacted. Therefore, they decided to get in and regulate that space. That's how SIF, the Specialized Investment Funds, were formed, which will get launched from 1st April 2025, will be a new category of funds that will be launched with a minimum ticket size of 10 lakhs. This is only from the existing mutual fund companies. So all those mutual fund companies that fulfill a certain criteria of being in existence for a certain number of years, certain number of assets, and certain experience of fund managers can alone launch SIF. And these SIFs, like I mentioned, will be having a minimum threshold of 10 lakhs. So these are not for retail investors. These are for already experienced and high net worth individuals. Who can invest in these SIFs? Like I mentioned, there is a minimum threshold investment of 10 lakhs. This 10 lakhs is based on the PAN and it is per asset management company, which means it doesn't count the existing mutual fund portfolio that they already have with that. This is a separate category by itself. Individuals who have the capability to take a higher risk based on this specific schemes are the only people allowed to take exposure in this SIF. Let's look at what SEBI has thought about in terms of product differentiation. SEBI has given a go-ahead for fund houses to launch SIF products with 3 broad variants. In the equity category, they have 3 product lines that they have approved for. That is equity top long short fund. Now what this fund does is essentially will look at an equity portfolio that can go both long and short. For your information, the regular mutual fund can only hold long positions. What do we mean by long? They can buy and hold securities for the long term. But in this fund, up to 25% of the portfolio can also be short, which means that the fund house can buy long positions up to 75%, can also buy short positions up to 25%. What is short? Short positions are when you sell first and then buy back later, which means that going forward on these funds, the portfolios managers can make money both when the markets are going up as well as when the markets are going down. So that's why a long short fund is a smart investment, a higher risk, but a smarter investment. The next equity product is equity X top 100 long short, which means it will avoid the top 100 funds, the companies, and then invest beyond that into equity portfolios on a long short strategy. Third is there is sector rotation long short, which means SEBI allows the fund to manage up to 4 sectors at one point in time on a rotation basis. So this gives a very active opportunity for the fund manager to invest in sectors that are performing and also short sectors that are going to go out of fashion. These are the 3 equity variants that SEBI has given approval to launch the first set of SIFs in the equity categories. In the debt category, one can take a long short position on a conventional long-term debt fund. Again, a theme that we have not experienced in investing so far. Similarly, you also have a sectoral debt long short fund, which is some specific sector of funds which one will invest in, and there will be a long short portfolio within that. The last category is the hybrid category, where you will have an active asset allocation long short fund, which means dynamically it will move between debt, equity, and maybe even commodity asset and different asset classes at various points in times. Similarly, you will have a hybrid long short, which means a balanced exposure between equity and debt with short positions. So it's going to be a plethora of schemes, but I would watch out more for the equity SIF and the hybrid. I am not so gung-ho on the debt side as yet. I think it will pick up over a period of time. But equity and hybrid would be the first out of the block is my guess. Let's wait and see what comes out. Let's look at risk and liquidity. These products are high risk. So SEBI has mandated 5 categories of risk to be displayed for each of these funds. So any fund that is launched here must fall within these 5 risk parameters that are already predefined, so that investors can look at it and understand what level of risk they're taking on this product. On redemption and liquidity, these are going to be quite unlike the mutual fund. The mutual fund currently in operation are highly liquid, daily liquidity is possible. But in case of the SIFs, the liquidity is going to be a little bit more drawn. What I mean by that is equity SIF may have daily liquidity or even have something that is less frequent, maybe 3 times a week or thereabouts. Similarly, the debt SIF may have only a weekly once redemption or even less frequently, and the hybrid may have twice a week or thrice a week liquidity or even less frequent. What this means is that the fund managers aren't under so much of stress to liquidate every single day on these products. So therefore, it gives a little bit more time, given that the volume is a much larger piece. And this is a new product. SEBI is playing it a little kind of careful in this. In fact, there's also a clause that says, as per the asset management company and the offer document, they can actually give a much longer notice period of 15 days and say, if you want to redeem your investment, you give in your request, and it can even take 15 days for the fund to redeem your investment and give you your money. So it is quite unlike the existing mutual fund, which are highly liquid. This is not going to be so liquid, is what one needs to understand. What are the key takeaways for you as an investor? SIF represents a brand new opportunity for investing for you. It's a new class of asset and investments that I think will revolutionize investing in a very different way. Higher investment threshold of 10 lakhs means it's not a mass product. It's not going to be available for everybody. It's not for everybody actually. Greater flexibility. This product gives the fund managers greater flexibility in terms of how they manage portfolios. Not only will your fund manager make money when the markets are going up, but they will also be able to generate wealth when the markets are correcting using the long short formula. SEBI is making sure that there's a higher level of disclosure in account with the higher risk that this product comes with. So it is going to be with a higher risk and disclosure as well. SEBI is opening out asset management companies to launch this post 1st April. So you should look out in the new financial year for these products. And what is our advice to investors? Take this slowly, read the offer document carefully, and then commit your investment. These are not easy products. These are definitely very effective products. They manage risks at a much higher scale. They are likely to enhance returns for a given rate of risk. but they also are absolutely new products. So we would love for you to take cautious steps ahead and go ahead and into some of these products. Slowly, as the category builds, I think it's important for you to build your wealth as well. If you have any thoughts or ideas relevant to what you want to consider investing in SIF, do share your comments. We are very keen to listen to what you have to say about this exciting product. Or if you want to know more, do reach out to us. We'd be happy to clarify or give you more information that we can hand on.